So ladies and gentlemen, please put your hands together to welcome the team member of the Bangkok Bank InnoHub Accelerated Program. Please welcome คุณวริศ ธโนปัจจัย
Hello, good morning, good afternoon. So the Bangkok Bank InnoHub Accelerator Program is a program from Bangkok Bank, Bulo Ventures and Nest that we foster the startup from global into Thailand. We have a passion to bring in the ecosystem of the startup from global into the Thai ecosystem. And today it is my privilege to introduce to you one of the finalists from the Bangkok Bank InnoHub Accelerator Program last year. This startup is a startup in the area of wealth management. He is from Singapore. His board members are the experienced Deutsche Bank management. They have raised funds 5 times. They are now in the late Series A. They're expanding their product and service into all the major fintech hubs around the world. London, Zurich, Geneva, Singapore, and now they're having an eye on Thailand. Without further ado, I would like to welcome Mr. Martin Pickrodt, the Chief Product Officer of Canopy.
Hi, good afternoon. Today I want to speak about a topic that is very close to my heart. It's about open banking. The reason it's close to my heart is I am a consumer, I am banking, and I truly believe that with more consumer centricism, we can actually get to much better user experiences, much better banking products, and hopefully a brighter future. The other reason why it's close to my heart is we are a data company, and as Canopy, we work with investors and advisors to understand their portfolios, and for us, aggregation and getting access to data is very important. Now, I actually want to start not to talk about banking. I want to start to talk about online identity. And that's really weird because it has nothing to do with banking. However, it is very important because it plots the path of where we are going. And you can see here on this chart, we have sort of how much control the individual has versus how dependent they are on individual system. And we have different stages, and only recently have we started to move up this curve into other levels. And this is what we have right now. This is extremely common. It's called centralized identity, which means when you're using any service, you are signed up with that service. It doesn't talk to anybody else. And if you are trying to have access to your data, it's very difficult. And especially integration with anything else also is difficult. It actually has a lot of control for the owner of the data. So who you are banking with, who is providing that service, they know everything about you, but you actually don't know what they know about you. This is now moving to something that's called federated identity. You may have seen that, you may already use that, the button that says join via your Facebook login or with your Google login. It's basically somebody who has your identity and whose identity verification you can use to then sign up faster. If you have used it, you would have noticed that it is usually very fast, it's usually much better, you don't have to enter all this data. And most of these providers also help you to see who has access to your identity, so you already have more control over who gets the data, and sometimes you can even choose how much data other applications can see and can use. Now that brings us to sort of the dream scenario, which is called self-sovereign identity, which is basically, why do I need to rely on Google, Facebook, or whoever is the provider of the federated identity? Why don't I just control it myself? And this is obviously a very great idea. It was pioneered in the Nordic countries. And there was a paper from the Finnish Ministry of Transportation and Communication called My Data, and it was only published in 2014. So that's only 3-4 years ago, and since then, the idea has basically sprouted and become a whole lot more important, and we also have the technological capabilities to start implementing it. Now, importantly, it touches every areas of our life. So it can touch what we do with the government, what we do with public services, what we do with hospitals. Imagine you have your medical data with yourself, and whenever you you see a doctor, you receive that data back and you can share it the next time you see a doctor. Of course, what I'm interested in is banking and finance, and eventually how that sort of, I broke it. No, I didn't. Okay. Banking and finance, eventually how that leads to sort of better products for the consumers. Interestingly, you might say self-sovereign identity sounds like something that only users benefit. So why would companies actually support it? The first thing is right. Of course, for users, there's a lot of benefit. You're empowered. You have your own data. You can decide what you share, what you don't share. But even for companies, it has a lot of benefit. If you, especially in the banking space, if you see how much money banks have to spend on a KYC, which is the Know Your Client process, or anti-money laundering, it's actually mind-boggling how much effort has to be put on keeping data current, understanding the clients, and knowing what's going on, and that's in banks. So if you imagine you have multiple bank accounts, you probably have insurance accounts, and you have your accounts with your utility provider, with your doctor. So everybody is keeping information about your identity and about yourself, and it basically becomes very expensive. So being able to bring this down can also strengthen the bond with the consumers, and it can make it very fast to launch new products. That's one of the reasons why I'm excited, because it makes it very consumer-centric, and hopefully we'll have better products. Of course, that means society benefits, so we'll have more innovation, we have less friction, and therefore it's a lot more sustainable. Now, what does it mean for banking? Of course, in the case of banking, it means sharing, not sharing its data. And when I say sharing, it doesn't mean sharing freely, because that's what nobody wants. But it means opening up the amount of data that a financial institution has with other providers, as long as the user has consented, which then allows it to for a whole lot of applications. And that could be things like counseling for investments, that could be applications for loans. And if you imagine you have to print out all your documents and hand them in for a loan application, if you've ever done this, it's great fun if you like lots of paper and finding documents. So open banking has sort of received a large push, and actually if you're looking at what has been happening in different countries around the world, the front runner actually is Europe, which is really strange because usually these guys aren't the front runner. But there's a few countries where it's practiced. So both in Australia and in the US, it's actually very common for institutions to make data available to the customers, and therefore to be passed on. So Australia, it's really practiced. You will find it. But actually, they didn't really have legislation for it for the longest time. So that's the strange thing. These markets have developed to have this feature of sharing the data without actually having the legislation in place. So then now Europe was the first one to plan this legislation on open banking. And since then, sort of a few other countries have followed. So Australia is establishing it. Japan has put something in place. All of these actually have extremely long implementation timelines. So even though we say Europe has legislated it, it's going to take years until it takes in effect. And the reason for that is it's a large technological challenge for the institutions to be able to comply, because most banks have internal core banking systems that basically were written not in this millennium. So you'll be surprised sometimes what you find out of banks, but very often there's sort of large legacy issues that you will find in those institutions, and that's always fun. So implementation timelines have to be long. Many other countries are looking at it. Singapore, for example, MAS as a regulator has been very vocal about it, very positive, very keen, but they've been a little bit shy with legislating it because they're not sure whether they want to put the pressure on the institutions. But they've been very supportive in saying we really want them to go that way, and sooner or later it's going to happen. Thailand is, looking at it very closely, but does not have any legislation in the pipeline at this stage. Now, how can this be used? Obviously, Canopy as data aggregation for financial information would use it, but I wanted to show a few other use cases. All of them are actually financial, given that that's the space we operate in. Mint is something that a lot of people may know. They are aggregating data about your bank accounts, so you can track your expenses. It's very useful if you really want to do some planning about your expenses. Tink in Sweden, they came out very recently with applications to share data from all of the Nordic countries, or not share, but have access and being able to aggregate it. And my personal favorite is Starling Bank in the UK. The reason why I like them so much is they have the name bank in their name, but they are what is called a challenger bank. So it's a fairly new institution. They're not well established. They're very young. They're growing extremely fast. And that growth and that sort of youngness of the organization puts them in a unique position. One is they don't have the customer base right now to support the profitability. So they have to rely on growth. They have to win customers from other institutions, so they need to be faster, they need to be better, they need to be smarter. And it's very difficult to build a bank based on a limited amount of resources. So what they have focused on is an open platform. So they're openly advertising to say, we will not build all products, but we will build a platform for the consumers, and we will then bring in the best provider of a product. And if that product is wealth management, that product is insurance, or that product is saving, it doesn't matter. We will bring it from our competitors on our platform, and we will basically thereby serve the consumer best. Very much a little bit like an iTunes store where Apple takes a cut of everything that you're buying. Now, this is what I want to leave you with, because it basically means the existing banking system really has to look out for it. Open banking is only one of these trends. Sort of the whole topic of self-sovereign identity leads to something that is extremely user-centric, and the user-centricism basically will make better products. The best case that I still have in mind is Uber. It's not that they've invented something new. I mean, everybody has called a taxi or has done a trip with a limousine service maybe from the airport. So it's not that they invented something new like, oh my God, you should be able to call somebody in a car to pick you up. In fact, actually, 10 years ago, people would say, don't speak to strangers on the internet and don't get into strangers' cars. And now what we do is we use the internet to call strangers so we can get into their cars. Why? Because it's convenient. So they have solved for the user experience. They have not invented taxi service. They've invented the user experience of making it very convenient and very easy to use, and have basically displaced half the taxi services globally, which is huge. So thinking about open banking, if we can solve for better products and we can solve for the user-centric approach, then banks really need to look out. A lot of them are working very hard on it, so it's quite refreshing that, let's say, Bangkok Bank is partnering with VCs like Nest to bring innovation programs to Thailand and to see how to be able to change the organization. We just need to make sure that there's enough focus on actually making it happen, because otherwise somebody else is going to do it, and then any of the banking institution can look like Mr. T-Rex here. Thank you.
Sir, thank you very much, Mr. Martin, for sharing us with this information.